What's going on, everybody? David here with Free to Be, and thank you for joining me again for another, live virtual investing session where I take my own money and invest it in a portfolio that I basically started from scratch. And every time I upload one of these videos, or every time I do a live, it's going to be another $100 that I'm going to be funding my portfolio with. And we can just take this journey together, and you guys can see how my portfolio grows over a period of time. Now, again, I always would like to start by saying I'm not a financial advisor, and none of this information should be taken as financial advice. You should always do your own diligence, your own research, and speak to professionals who you've hired for advice if you need that. But I want to make a point to say that investing is a way to grow wealth. It can work. It will work. You have to be patient. You have to have a long-term approach with it. And that's what this video and this series is really about. So thank you for joining me again for another episode. This is episode 2. So if you've been following along, now we have $200, or I will have $200 invested or funded in this account. So we'll see where that goes. But before I get started, as always, if you are new to my channel, please take a moment and just click the subscribe button up here. It really helps the channel grow, and you can stay in tune and stay, in the loop when it comes to new videos that I upload. I try to upload a few times a month, but sometimes, I have longer gaps in there. But if you turn on the bell notifications, you'll get notified when a new video is up. And basically, you can join me on my journey to financial independence. I hope to bring valuable content that's important to you on your journey as well. And you can kind of see my progress throughout the months and over the years. So let's go ahead and hop into my Robinhood account, and we can take a look of where it stands today. So I did go ahead and fund this account with an additional $100, and you'll notice that my buying power is now $100. And my total portfolio is $191.26, and that is because the market has been down, and I've actually lost about $9. Now, this shouldn't scare anyone. Again, when you're investing, the strategy should be long term. Whatever the vehicle is that you're using. If you're using a retirement account for investing, you should not be looking to touch those monies until you're retired. If it's a brokerage account like Robinhood or E-Trade or Merrill Lynch, any of these other ones, and you're investing post-tax dollars, even in those scenarios, you shouldn't be looking to touch the money in a 6-month period. You should at least hold for a year to take advantage of the tax benefits of holding those assets for that long. And ultimately, that's really where you're going to see growth. If you were to put in your money and try to make a quick buck, that's not really how the stock market is meant to be used and utilized in the manner that you want to, in terms of growing wealth. So taking a look, obviously, these are what I hold currently. I hold an index fund ETF, Schwab, that we invested in last time. That's down. Hold a little bit of Apple. That's down. We hold this Arbot, which is down as well, and our crypto holdings are down. So across the board, everything is down, but that doesn't change the strategy, right? So the whole point is that you kind of cost basis out your investments. So if you invest a little bit over a long period of time, ultimately you're going to be in a great spot. So what we're going to do today is just invest this $100 using the same strategy that I outlined in episode 1, which is going to be 40% of it goes to an ETF or some kind of index fund where it has some stability and will grow slowly over time. 30% of it will go to a blue chip company like your Apples, like your Disneys, like your Amazons. We'll take about 20% of that leftover amount and invest it in something that may be a riskier investment, and then we'll put 10% of it into the crypto markets, again, into cryptocurrency, in hopes that that also continues to go up over time. So let's jump into cryptocurrencies first. But I did want to show you something that I didn't get to show you last time. On Robinhood, there are a lot of great research tools, and that's something that really I like about Robinhood, aside from being able to purchase fractional shares and have your stocks and crypto assets in one place. I do like the fact that they have a lot of tools to kind of research and learn more about what you're investing in. So down here, you'll see some trending lists, and this is basically a great place to get started. If you don't if you aren't too familiar with ETFs and want to see what's going on and which ones could be good ones to invest in, you can take a look at this index ETF. You can look at the most popular ETFs. Get yourself a sense of what people are investing in. If you're new to crypto and want to see what's out there, you can look into this category, and you can basically go ahead and see a variety of different categories and what you ultimately want to invest in. For our purposes here, we're going to start with index ETF, and we're going to invest 40% of it. We have Schwab here, but I think the best way to do it is obviously to cast a broad net and invest, across multiple ETFs and slowly build a very diverse portfolio that way. So we're going to we'll take a look at the 20 most popular ETFs and see what's kind of trending here right now. So we see that there's a Vanguard S&P 500 ETF. That one is trading at about $387 a share. And we want to see what makes this, what does this ETF consist of? And we can take a look at by the detail page here. And we can see that they invest, in technology, financial services, and we can kind of drill down, I believe, in each one of these to see and get some additional information as well. So I highly recommend you do this. Again, don't listen to my advice because I am not a financial advisor and I am not providing you with any specific information in terms of what you should do with your money. But these are some great tools to help kick off the research process if you're new and don't know exactly what to throw your money into. So we're going to go with this one. VOO, we can take a look again at the chart up here at the graph. We can see that the 5-year outlook has been pretty good. Obviously we have a dip here because, what's going on in the market. But we're going to go ahead and get $40 worth. So we're going to go ahead and place our order. Again, because we're placing it after hours, this won't be executed and processed until tomorrow when the market's open. But nonetheless, we're going to go ahead and place the order and get that queued up. So we'll go ahead and hit review order. That's fine. And we will buy. All right. So we got our ETF out of the way. And this is, again, it's an S&P 500 ETF. So it's investing equally over those top 500 companies in the market. So we're going to go ahead and go back to the main page here where we started. And the next thing we're going to do is put our 10% into crypto. Now we hold Ethereum. So we're going to go over to the crypto categories. And like I said in my first video, the two that I am, really most excited about is Ethereum and Bitcoin. So since we hold some Ethereum, we're going to get some Bitcoin today. And again, prices are down right now. It's a great time to buy some at a lower cost. So we'll buy our $10 worth of Bitcoin. We'll hit the review order and submit this one. Now, obviously, crypto markets are different in that they're actually, working 24 hours a day. So that order will go through pretty quickly. So we will, once we do that here, we have that. Now we're going to go back to our main page. And so now our holdings show up here. We have some Bitcoin, we have some Ether, and then we have the new fund that we got. Now we're going to look at our blue chip stock, and we're going to use 30% of that new money, or $50, and we're going to use basically $30 of that to pick something else up. So we have some Apple, and so Microsoft is one that has really, caught my attention recently. So we're going to go ahead and just look that up here by ticker symbol, or you could just look up by the actual company name, which I'm doing right now. So you can go ahead and select Microsoft, and you see again, down. Market as a whole has been pretty down here, but if you look at the 5-year for Microsoft, again, with blue chip stock, you're typically going to see green over a longer period of time, 5, 8, 10 years. So what we're going to do now is go ahead and purchase $30 worth of Microsoft. We're going to go ahead and hit buy. And so now we have that order placed as well, or queued up for tomorrow morning. And then finally, what we're going to do is take that last remaining $20 and invest in something that might be a little bit more speculative, but could have a lot of upside. And so the one that I had been researching earlier this week outside of this platform, but I can show you kind of the benefit of having the tools in Robinhood as well. Pubmatic is one that I read about earlier this week through a random finance article, actually. And it seems that this company, definitely has a lot of upside. They work in the space of advertising and technology. So, more and more digital advertising is occurring in our world. And so this is definitely something that I could see there being some value to it. If you look, I believe they went public in 2020. So you'll see the graph here. It'll indicate when they went public. And so when they went public, their IPO price was $20. It's shot up, as normally happens, to, I think it was around, it looks like $64. We should have a high here. So the 52-week high is actually $76.96. Shot up that high. Typically happens with the IPO. Skyrockets and then it dips back down. So right now it's at about $25 a share. If you come down here and look at the analyst ratings, there's 10 ratings on this company, and 9 of the 10 analysts have placed a rating of a buy on this one. So again, based on that, based on where it was and the potential that it has, this is one that I am going to speculate on and buy a little bit of with my money today. So I'm going to go ahead and place an order for Pubmatic for the remaining $20 that I have to invest, and we're going to go ahead and buy that share. Now, what I want to make clear to you guys is, like, obviously the first few episodes of this series, I'm going to be buying fractional pieces of these various stocks and funds. But eventually what I'll do, once I have grown a nice diverse portfolio of maybe 20, 25 different assets that I'm holding, then I'll start filling them out and start buying, more of one thing slowly, kind of dispersing my funds across the ones that I've already picked. I won't just keep buying, 4 or 5 fractions of new things every time. I'll go back and fill those out so that I have complete quantities of, Apple, Microsoft, the various funds. So we'll start doing that in later episodes. But this is just to give you an idea of what it takes to get started. Again, it's not that difficult to get started. You need a Robinhood account. You need as little as $100. Every other week. That's the frequency that I'm going to show you how I'm investing my money with. So if you don't have a Robinhood account, there is a link down below in the description. If you click on that link, you will get a free share. It's an affiliate link, so I'll get a free share as well. But that'll kind of set you up on your way to investing and building a portfolio. Now, again, like I said, right now, you'll see that the total value of my portfolio is down $9. But I don't anticipate that being the case 6 months from now, a year from now. And only time will tell, but you guys should be able to see and track my results as I continue investing. Again, the best strategy for investing is to have a long-term strategy. None of these things are going to, make you rich quick. Those opportunities are far and few between. You might read about how somebody invested $100,000 and then the next day they were worth $40 million. That's a rare case. That's really just as likely as winning the lottery. The likelier approach to building wealth using the stock market is to have that long-term approach. Have it be 3 years, 5 years. After 5 years in accounts like this, what you'll do is you'll pull back some of those profits and diversify some more, invest in some new asset classes, and then you continue just building and building. You don't have to be on top of it every day. It's just not like a day trading type thing. But every month you check into it. If one of your assets is really high up, for example, if I'm looking at this account and I notice 12 months from now my Microsoft is triple what it was, I'd probably sell a third of it and then invest it in something else. That way I just continue to diversify my portfolio and continue to use those profits and leverage those to build the wealth. So that's it. That's all I have for episode 2. Check back with me. Again, if you're new to the channel, make sure that you subscribe and turn on those notifications, and you'll be alerted every time I go live and every time I'm posting one of these videos, so you can track my progress and go on this journey with me. I appreciate everyone checking in, and we'll see